Hey guys, welcome to episode 3 of the volume profile method. Gonna be a long one today because we will be discussing volume profile and footprint trading combined strategies. I already made this episode. It will take about half an hour, but I recorded it without sound, so I'm doing it over again. In order to navigate the market successfully, it is essential to understand the dynamics between buyers and sellers. And even more, we have to understand how together they make up market structure. So please stay for the entire video because the conjunction of the volume profile and the footprint, two extremely powerful tools, can become quite amazing if we know what we're looking at. I even upgraded something very professional, so here's an intro and then we'll dive in. All right, guys, we are ready now for take 2. But firstly, and this is quite important, we'll go through a little bit of trading mindset. I have to talk to you about the Pareto principle. If you never heard of it, it's also called the 80-20% rule. A simple idea that often 80% of the effect come from 20% of the causes. For example, in a business, this might mean that 80% of the sales come from 20% of the customers. Or in everyday life, it could mean that you wear 20% of your clothes 80% of the time. It's a way to understand how things are not always evenly distributed, and focusing on the most important 20% can often lead to the most significant improvements or results. For example, I am a big fan of physical fitness, but when I started putting more effort into my 20% of my fitness regime, like rest and food, I've noticed an 80% better outcome. If you're interested in my fitness tips, workouts and more, I have a dedicated Instagram page where I post my fitness related content. You can find it on Instagram searching Renko_flow. And if you need my trading Instagram, it will be just the Renko. But back to the Pareto principle. What does it translate to in trading? Firstly, focus on the 20% of the work you're doing to improve 80% of your outcome. This could be your journal, your prep, or any other thing that you're neglecting. It also means, and this is very important, that only 20% will run off with 80% of the profits, while the other 80% get stuck with feeding on 20% of the profits. So, how can we become a bigger fish? That's a really good question. My answer is think outside the box. For example, I don't trade US sessions, I only trade Globex, while everyone is saying you gotta trade the US sessions because it's better and more volatile. But if 95% of the traders fail, why follow what 99% of the traders do? This is also why I don't use indicators and I'm focusing on order flow a lot. If you want to be successful at stuff like this, like order flow, you gotta put in the work that 95% of the traders are not willing to do. And rant, but I hope you learn to trade keeping the Pareto principle in the back of your mind and form your own idea on how to think outside the box. Please comment anything that you're currently struggling with. The low engagement trade I have now makes it a good opportunity to help you personally through my little videos. Also, as always, subscribe and hit the notification bell. Feed a newcomer to the algorithm because I just want to help you win. Back to the essence. I've already been going through this in full detail in my video about trading footprint charts, but we'll do a small recap on this. These charts display price, volume and time data in a unique way that allows traders to see the activity of buyers and sellers at each price level. It provides valuable insight into market sentiment and can help traders make more informed decisions. We firstly have to understand that what we see on the footprint are the aggressive market participants, and their trades are systematically ranked per price level in the order you want to be displayed, be it time-based, volume-based, etc. For my Globex trading, I like these charts. These are 13 range charts for ES. The time and sales window will help you see each transaction separately, but that's something for another video. If you already forgot, let's do a fast recap on aggressive and passive market participants. So imagine the market as a lake with the profits being fish. These are beautiful fishes. And we have the aggressive market participants They are like the spear fishermen. They throw the spears directly at the fish. They're always moving, eyes on the water, ready to strike swiftly at any sign of opportunity. They thrive on the adrenaline rush, making quick decisions to spear the best fish as soon as they see them, always in constant action. Passive participants, on the other hand, are more like fishermen who will cast their lines in the water and sit back. They choose a good spot, bait their hooks, and wait. Let's put on a hat. These fishermen trust that over time the right fish will find their bait. They're patient, they often enjoy the calm of the day, knowing that good things come to those who wait. So, the passive participants will use what we call limit orders, and the aggressive will use market orders, like this. The limit orders will be shown on a DOM or a market depth map or a book map, while the market orders will be shown on the footprint and the time and sales window. So let's dive back into our footprint charts. Now, what do we see on these footprints? Firstly, I will change the color for this one. We see on the left side the aggressive sellers, and on the right side of a footprint we see the aggressive buyers. My footprints also have a volume profile which is very short term, so I can see the interest in buyers and sellers at that range. I choose to look at a range footprint because I can see the interest better in certain levels. If I use a timed footprint like a 5-minute, it will be all over the place. So what do we look for on the footprint? We don't look for every number. I really don't care about all the numbers here. I look at them mostly like these big numbers here: 1,335, 1,404. Here we have 3,000 and a bit, above 1,700. I look at the higher numbers and I look at stuff like these. This is what we call imbalances. I have mine at 4. So every time a seller hits 4 times the price of a buyer, it will give me another color. Here we have a stacked imbalance of buyers, meaning price has gone up very quickly right here and buyers bought up all this. What does this tell us? That buyers are being more aggressive and sellers cannot stop them at this level. Now let's look for some other stuff. Here we have some other stuff that I look at. One thing I look at is zero prints. So above we have a 0 print, below we have a 0 print. This is a finished auction. If we have 0 prints at the top and at the bottom, mostly it will be a balanced profile. And sometimes, like here, we have unfinished auction. This is something we have to keep in mind because price can always return here to finish the auction and finish it off with a nice 0 print like this, for example. Now if we have an unfinished auction in the middle of this range, I don't look at it. I don't give a... it doesn't interest me. Unfinished auctions I look for at the tops or the bottom of a range, just like here. I wouldn't go long here unless the circumstances are really clear, because price can revisit this unfinished auction very fast. So what am I looking at? I look for stuff like this. Voila. Here we have a very nice example of what to look for. So let's play this entire thing. Oh, this is a beauty. This is a beauty. I'm not cherry picking here, guys. I'm just looking for setups that fit what I'm looking for. All right. So one of the things that I am looking for, oh, this is an amazing story. This is beautiful. So one of the things that I am looking for is reversals. I tend to look for reversals in the order flow. I tend to look for strength where sellers overcome buyers and buyers overcome sellers. So this is what I'm especially looking for. I look for stuff like this. This is what I call a delta flip. So we have a candle with a lot of interest at the bottom, and we have a POC, and the candle closes above this POC, meaning for me that there is no interest below. Now look closely at this candle, what I told you about these unfinished auctions. This for me would not be a setup to go higher because we have this unfinished auction right here. And as you see, market comes back, takes out this unfinished auction. And what does it deliver for us? Another delta flip, this time with a nice finished auction. You'll see right here, no interest below. We can see that on this volume profile. The interest below stops here. And the close of this candle is above the POC. We also have a green delta and the green delta change. For me, I would take a long right in this zone between these POCs. We also here have an imbalance and a buying imbalance answering this selling imbalance. The market doesn't get higher, so this for me is a valid long. We would have long this could be a 3 to 5 pointer if we could hold it, if you have the balls to hold it when this drawdown happens, because your stop will be around here. You could have made some really good money going up. Now, as we go up, we see buyers incoming. We see this buying imbalance right here. There's one thing you have to notice about this buying imbalance. It comes at the end of the move. So here we bought, boom, 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 going up. We have buying imbalances right here. And we have no buying imbalances. Little bit of selling here. We'll make it a little bit more clear. So buying imbalance here, price keeps pushing up, buying imbalance on the downside, little bit of selling imbalance, and then we go up. And right about here, we see all this buying coming in. What do you see at first sight? There is not a lot of interest in our little volume profiles on the ranged foot chart, but there is a lot of interest right here. So this is something we need to notice, because on the next candle, we once again get a beautiful delta flip entry, meaning 0 print above, POC, we close below the POC, selling imbalance, prices cannot take out this POC, this zone. What do? We go down. So this is something that I look for on my footprint charts. Once again, we had a whole bunch of confirmations right here. We see these selling imbalances coming in here. We see more selling imbalances on the way down. Buyers try to push up, but they disappear here. We only have interest below the selling imbalances. Below the selling imbalances. Where do we have other selling imbalances? No, this is it. So we spread them out. Here, once again, we have this zone drawn out. Price comes above. Nice 0 print. POC. Close below the POC. Selling imbalances. Can't take out the POC. If you want, you can double down right here. Take another contract. Short. With 2 contracts. Take another 10 pointer if you like. We see more selling imbalances coming on. Of course, guys, this is hindsight. If you have the balls to take stuff like this, really take it. You use this with a 2-point stop. You can get like 10, 20 points out of these moves very easily by reading these imbalances, putting them on your chart, just like this, seeing what price does above, how price reacts below. Once again, we have this selling zone right here. Draw it out. Oh, draw it out like this. Selling imbalance. Once again, in this sell zone, POC, close below the POC, get more selling imbalances incoming, and we go a little bit more down. So this is how we see the footprint on a short term. Now, show you another footprint chart, and I'll show you this exact same setup that we have here. So this was about right here where we could have gone in. No, I'm too far, but once again, nice delta flip. It's always the same. Market always does the exact same things. Here it was. So we have 1420 and what day? Just a second. 15th of March. So we'll go right here to the 15th of March, 1420. And this is also the way you can backtest, guys. This is also the way you can see strategies form. So once again, we are here. This, guys, is a delta footprint. So it shows you actually the same stuff, just not the bid and ask side. I have this same volume profile right here, and I also have my delta as a volume profile, so I can see the nodes very clear where the bigger buying or selling deltas are occurring. So let's dissect this a little bit. We've got big selling deltas coming up here, and here we have a nice buying delta. Also the blue balls on my screen, they are bigger blocks, bigger order blocks that are coming in. So what do we see here? We see a big buyer stepping in right here, and we see more sellers trying to push price down. Here we see a lot of selling. You see this big selling node. So first of all, what is buy or sell delta? It is the buyers minus the sellers, nothing more than that. So if we have 100 buyers and we have 101 sellers, our selling delta will be 1. So we have 1 in red. If we have 1,000 buyers and we only have 100 sellers, we have a buying delta of 900. Easy as that. We can see the difference in interest between buyers and sellers at that price. Once again, the footprint trading I show you here is very short term. This is meant for scalping. I tend to take like 3 to 5 points on this, but I will show you in a few minutes how we can take more points of this. Like I say, every good trade starts off as a scalp. So if you can take 3 points, you should move your stop to safety and try to target a bigger target. At least this is the way I trade. I take my 3 points, put my stop there, and see if the market can go higher, and I will trail my stop according to the profiles I see. So, once again, delta. Here on the right, you will see the same information. This is a delta volume profile. This is just the same delta displayed on the right, so I can have kind of an idea of which zones are sell zones and which zones are big buy walls. So once again, we see here getting a notion of buyers below, big buyers below, sellers cannot breach POC, close above the POC. We tend to go up. Here would be a good place to take our trade at the POC, stop below the POC. Also, we have this nice volume profile, which indicates interest below, but we close above the POC. Once again, buyers step in here and we shoot up. This is actually all you have to look for, just the interaction between buyers and sellers, because it's crazy how this works. If we can look inside the candles and we can see the interaction between buyers and sellers coming, it gets pretty easy. Now this is another one of the great examples to start a short, for example. What do we see here? I think we're going up like this. Yes. So we have here on our left side, guys, I'm not cherry picking this, I'm just going through some examples right here. We see volume strategically being put above POC right here. Close is right at the POC, but we have sellers here and we have big delta change right here. I would personally not take this short. I would look at it on the bid ask footprint. But if we look a little further, we draw this zone, this selling zone out. We get here. Now on this, where was my zone? Like right here somewhere. Okay, we see once again this POC, selling below this POC. We have buyers trying to breach higher right here. They cannot breach higher. We have a lot of buyers here at the top, but only minimal volume. The volume is concentrated here below. So once we get back into this zone, which is a selling zone, we have no more buyers coming in. Look at the numbers: 5, 14, 42, 80. They are doubling or tripling with every step, which means the buyers are getting exhausted. POC, close below the POC, buyers trying to go into the zone, short right here, stop right here, ride it out for, let's say, another 5 to 10 points. It'd be nice. So this is how a delta footprint works. We can go much deeper into the delta footprint and what we see on here. But let's first take a look into how we can get long-term levels. So if we combine a delta footprint with a volume profile, we can make something very magical. First, I'll let you see a delta volume profile. As you see, read volume and you can read the delta on this. You get your value areas, you get your POCs. But the way I see it, I have no clear indication of the delta. I can see the delta, but there's no very clear indication. Some people will say, yes, this is a value gap. Let's mark out this value gap. Right, we come in here, we sell off, we see a little buying delta right here. But how can we make this very visible to the eye? I have a solution for that, and that is this chart. This is a daily volume profile with a 2-hour footprint delta chart. This is a little bit different delta chart. The delta chart here is just color coded. The greener it is, the higher the delta is. The redder it is, the lower the selling delta is. So I can get a good and clear view about where the buyers and sellers are positioning themselves. Each bar is segmented in one point so that my overview doesn't become cluttered, and it is pretty obvious for me. So let's take a look at this fair value gap that we found in the previous chart. The fair value gap is actually this gap. What do we know about gaps? We know that price shoots very fast through gaps, making up a fair value gap. All right, and let's put some theory to the test. What we have here 2 days ago is a nice balanced volume profile. What do we see on this volume profile? We see sellers stepping in underneath the value area. Sellers stepping in, price pushing down, buyers try to come in. And here we have this huge sell-off that's been bought up directly. Why? How do we see it's been bought up directly? Because the candle closes above this huge buying right here. Keep this huge buying in mind. That comes after this little sell-off. So this is what we call responsive buying on the long term. We have buyers stepping in, blah, and we go up. Something that catches my eye here is this volume node. We will be talking about this in a few seconds, where we have this nice sell-off because there's not much buyers here anymore. So exhaustion of buyers. And this is where it becomes interesting for our long-term levels. We see all this selling delta coming in right here. This is a lot of selling delta. These are these sellers trying to take out these buyers. They have successfully taken them out, taking prices much lower. They have succeeded in taking out these buyers, and price shoots very fast to the down. So this is something we have to keep in mind. We see this gap, we see these buyers here, we know there's sellers present. So this for me is an area of interest. We are below this POC, which is very interesting, and below this value area. So we make our zone a little smaller, below the value area and below this buying area, making this far more precise than any fair value gap you'll ever get. Because what do we see here? We see these buyers coming in the end. We know this is the level, and we see this buying coming in. What does this buying represent? This buying represents absorption, because we know that in the case, I'm just going to zoom this out a little bit, in the selling zone, we have 2,581 buyers that cannot push through to the upside, that cannot push through our zone. Why is that? Because, as we already said, the footprint only shows the market orders. So the aggressive market participants. The passive sellers are resting here below, and they have their limit orders right here. See this? Does this make sense? So we shoot up, and this is absorption. Now let's see how this absorption looks on an order flow chart. So this is 12 o'clock, 15th of March. Once again, go to 15th of March, 12 o'clock. Right. So we can see here the zone that we drawn out. And now let's take a look at this. So we have this huge buying coming in here. We have the blue balls that represents our buyers. Buyers are trying to get it up right here. So we know this zone is a selling zone because of the red delta that we had on the long term. So buyers are trying to take it here, but they get pushed down. They're trying to buy it up back here, back to the top, and they get pushed down very heavily here. Look at this delta right here. All this positive delta signals to me that there is a lot of aggression here. Passive sellers are just selling them out. What we get next, this is very important to see, negative delta change, close below POC, aggression. Next candle doesn't come into our zone, so we establish a nice short. We can catch this short if we can see moves like this. Boys, these are the moves you want to have. These are the moves you want to take. Easy as that. So let's take another example. Look at the 2 hours once more. Look at the nice level we have here where price would turn for us. I think we have a nice example right here. Take a left. Yes. Let's take one right here. So here we have the P profile, which most of the time signifies a downtrend following. So what happens at the bottom of this P profile? And this is Globex buying. So in Globex, 700 buyers, 900 buyers is quite a lot for a Globex session. Underneath we see sellers, and these sellers don't get an answer. So here we have trapped sellers. They're sellers, they won't go down. Prices shut up. They are trapped here somewhere. So 2 days later, only 2 days later, come on, only 2 days later, we are back in a downtrend. We'll mark out this selling zone. Look at what happens exactly at this selling zone. We buy up. So this is something you have to keep in mind. You see this selling, you see this selling, here's buyers above, right here. You see this responsive buying coming in outside of this value area. So you know you want to push price back into the value area high. We get a retest of this value area low right here. So let's take a look at this chart. This is March 11th at around 15, and this is March 12th at around 15ish. So what do I say? March 11th. Let's mark up what we see. What do we see here? We see this buying. This buying is responsive buying. Sellers can't get any lower. So let's take this volume node right here. See this little volume node right here. Let's mark it out. Also, let's mark out this volume node that goes together with the POC. Let's mark that out as well, so that we can look what happened in there, form an idea. So guys, this is how you look at the levels. Now when I see to the left, I see a lot of selling delta right here at the POC. I didn't notice this before. So what do we see? A lot of selling delta. We try to push it lower right here. So we cannot breach the prior value area. It still keeps going, So we go up. Now let's take a look at this chart right here. Okay. So what are we looking for? We are looking for the exhaustion of sellers, and we are looking for buyers to step in. Where is our strategy? Here's our strategy right here. So we get underneath the zone, we get above the zone. We are playing here. We're just playing. I see a valid short right here, a valid short right here. But what is a good push up? Voila, here we have it. So we come to see, so what do we see here? Let's dissect this little part. Unfinished auction, right? Big buying delta. We move up and we have the delta flip. Not a total delta flip, but you get what I mean. POC, we close above. We have selling aggression incoming. But in the next candle, we see the POC at the lows. We do have unfinished auction here, but we don't get this auction right here because we are getting aggression right here and the aggression right here, making this another one. POC, close below, close below. So we know price is going up. Here we have responsive sellers. They cannot break through. POC, close above, and we shoot higher. Easy as that. So the other one that we marked out is this little volume node right here with no interest below. So this is also 1400 hours, 12th of March. So let's have a look. Oh, this is crazy. I think this must have been a news event or something. Because what do we see? All these zeros. All these zeros. All these zeros. This must have been a news event. I'm not trading this. When we have a lot of zeros like this, it means price is just going too fast. So we have to wait for price to stabilize a little bit. We don't, I personally don't like this kind of stuff. But what we see here after all these zeros, we see buying and selling coming back through here. We see back some responsive buyers. We get some responsive buyers right here, right here. We see us balancing out a little bit. Voila. So now this is a trade I wouldn't have taken. I'm going to be honest with you guys. This is a trade I don't even take. So nice zone, but no trade for me. But it's a level. We established a level and it's a bounce. So it's easy. So it's perfect. Let's choose one more level and then I'm going to close it down. The one I talked to you about before, because I'm looking at this level and I thought it was an interesting one to trade. Now we are looking at the volume profile. So we shoot up in Globex. We are shooting up, excuse me. So we are shooting up this little volume node. It didn't exist prior. So here we have a very balanced day with the two highs right next to each other. Maybe it's like maybe a point or a point difference. So we don't count that. So we have buying here at the tops. We have buying here at the tops, but buyers can break through. So what we know, we have passive sellers above that. Right here, passive sellers, liquidity, as you want to call it. So as we go up, we are forming this little volume node here, and it's all buying. See this? Make this a little bit smaller. So this is all buying right here. So the next candle we get, and this is very funny, we are building this volume, blah, blah, blah. So the candle we get is a very small indecisive candle. So this is the price in 2 hours. We go from 23.50 to around, what is this, 23.48, 52.48, I'm sorry. So we're moving into that price. We see a lot of buying going up here, 5.15, 6.84, 7.29. And suddenly above this profile, we see no interest anymore, only 152 buyers. Here in the next candle, buyers are making an attempt to push higher with 1,702, but they get a direct answer from the sellers. And once price goes back below this volume node, we know we have a sell. And what do we target? This here level or this POC. That's a nice day, guys. So what do we do here is actually we narrow it down just like with this gap. If we started out, this gap would be like 5.235 to 5.225. This is the 10-point move where you expect something to happen. We just narrowed it down from 32.25 to 29.50, which is only 3 points where you have to look for your setup. So if your setup occurs right here, you can take a 2-point stop, or if you're looking at the bigger picture, a 3-point stop, because you would take in this delta POC as your stop, maybe slightly above, to catch this entire downfall. Now the same as what we do here. If we trade this down, we can put our stop right below the right above the volume node. Sorry, getting tired. Right above the volume node, or if it falls underneath the value area, we take our stop right into this value area. So let's scan for, so the 14th of March. Here we have the top. Nice. So now we're gonna see what we have on the delta profile, but I rest assure you it will be exactly the same as what we always look at. So this is these lines I put up here is the Globex open and the Globex range. So the Globex range falls together with the upside of this value area, which will signal to me that we are looking for shorts below. So the range, I actually took 2 trades in here, which you can see at the arrows. This was the day that I took 2 trades and they failed because I was looking at the zone. I took 2 losses, 1 point losses, not very much. But I did stop trading afterwards and I didn't look at the market again. And if I would have looked like just 10:43, 1 hour longer, I should have catched this beautiful short, which happened right here. So what do we have? Buying delta coming in, can't hold on, POC, close below POC. We have this nice zone, negative deltas, no more buying deltas coming in, and price goes down. Here we have the same setup once again. So we have this selling zone that is formed now right underneath. We see the selling interest here. We see these selling nodes, dip to chip, until here. These selling nodes. This is the point where you could actually save sell. Inside of the value area, we see another delta flip occurring. So we see POC, close below POC, close below the value area. If you would take your short somewhere right around here, this would be your stop. So you can have a 1 point stop. If you want to be safe, you can take these 2 pointers and put your stop right up here. And you have a 2 to 3 point stop for this entire move down. So we see coming in. Oh, sorry, it's not an entire move down. It's just a point or 5 pointers. Sorry. And then we have yet another delta flip incoming at, once again, inside the value area. We retest it. See guys, I never seen this. For me it's as new as for you. I'm just dissecting this. So here we have 152 contracts at the top. So this indicates for me absorption. A lot of passive buyers, sellers right here. POC, big selling deltas, close below POC, and then finally we have this big move down. So I told you before I was anticipating this short move. I didn't get it here, didn't see my strategy in here. So if I just waited, I would have this beautiful short or this next beautiful short. So that's about it. So now we know how to, now you guys know how to find the buying and selling delta and look at the bigger picture. Look at how you can set targets and look at how you see the volume profile in conjunction with the footprints to indicate where buying or selling interest and buying or selling delta occurs. So that's it for me, guys. Thank you for watching this guide on mastering the volume profile with the footprint trading strategies. Don't forget to subscribe to the channel, hit the notification bell to get regular updates on trading tips and strategies. I will have more to come in the upcoming months so we can really learn in depth about order flow and footprint trading strategies, scalping, making smarter decisions, etc. Since I just started this channel and only have a small following. Thank you guys, really thank you all for your input. I'm very, very grateful for your support and the views I get on this channel. Even though I just started it, I was thinking I would get like 10 views per video, but it's really reaching out there, so I'm really thankful. But that's, since I just started this, we are still a small community, so ask me anything in the comments and I will try to make some valuable content tailored to exactly what you need to know. Hints for improving the channel are also welcome. So once more, thank you guys. See you next week. Stay sharp.